Where do I personally invest my money? Let's find out. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And I figure since I talk about investing so much and the stock market, I should let you guys know where my investments currently are and what I'm currently invested in. So without further ado, let's hop right into my biggest investments for the year of 2018 so far. So here is a chart of generally where my investments are at right now. This is current as of January, early January, mid-January, whatever. So let's dive into where my investments are and why. So my first investment, my biggest investment right now is just in an S&P 500 index fund. So with an index fund, like I've talked about before, it just tracks the progress of a general index, and it's very stable and yeah, not very volatile, and generally a good investment if you're just trying to park your money. So I have this in here just to sort of stabilize my returns. And honestly, it doesn't have to be that big of a part of my portfolio right now. I'm probably going to scale that down a little bit just because I am young and I am not very risk averse right now. So I can handle more risk than say an older person because I have all this time on my side. So that is the S&P 500 index fund. Over the last year, it has actually returned 29%, which is kind of ridiculous for an index fund. Generally, the S&P trends at about 10% a year, so 29% is crazy, and that just really shows how much of a bull market we're in right now. The stock prices are just skyrocketing, as you're going to see from the rest of my investments. It's been a great year for the stock market, and my investments have really just gone way, way up this year. It's not how it usually is, not guaranteed results at all, but this year was a really big bull market. And for the S&P 500 index fund that I'm in, the PE ratio right now is about a 32, and the forward PE ratio is about a 25. So with that estimate, the bull market is just going to keep going, but we'll have to see. And the forward PE is 25. So let's move on to our next investment, and that is over here with Google. So I am pretty heavily invested in Google. About a quarter of my portfolio is with Google right now, or Alphabet Inc., whatever. That's the sort of the parent holding company, but I'll just call them Google. And over the last year, Google has returned an astounding 37%. So that is just a great return for a one-year investment. Couldn't be any happier with that. Google is sitting at a PE ratio of about 37 right now, and with a forward PE of about 27. So that is good to see that trending downward. Can always go for a downward trending forward PE. And everybody knows what Google does. They got the search engine, they got YouTube, they got all this good stuff. So that's where they're making their money. Ads is a huge, huge business for them. And with the future of Google, they've really got a couple big projects coming up right now. The biggest ones that I'm looking at are the self-driving car. That is one of the biggest reasons I have an investment with Google. I just think self-driving cars are definitely the way of the future. They're definitely going to be here soon. And I think Google has huge advantage in that marketplace right now. So that is one of the main reasons I'm with Google. Also, the Pixel has potential, I think, to really get in on the smartphone arena, whatever. And I think they're modular phones as well. They have been working on some modular phones. Not really sure if those are going to come to market very soon, but I think there is pretty good potential for modular phones. I personally would get a modular phone if it wasn't super expensive. I think there's a lot of cool ways you could customize a modular phone that I would be very interested in. So those are the three biggest reasons that I see for investing in Google for the future. Next investment is Apple, which is also about a quarter of my portfolio right now. And Apple, everybody knows Apple. They've got the sleek devices, the premium design, the die-hard brand loyalists, the cutting edge technology. They've really got it all going on at Apple. So that is why I'm looking at Apple as a pretty solid investment right now. They've had a one-year return of 50%, which is ridiculous. And this stock pays dividends. So this is a good stock to get in on. I would very much recommend getting a long position on Apple right now. I see them as going nowhere but up, but that is just my personal opinion. They've got a PE of 19, which is a great PE ratio. That is very low for a tech company. Very stable. And they've got a forward PE of 14. And with those dividends, I just see Apple as a very strong play right now. And looking forward to the future of Apple, they've always got the iPhone, which is always going to sell. The iPhone is always going to sell no matter what they do. They're going to sell massive amounts on the next iPhone. They've also got their tablets, they've got their computers. Honestly, they're just the diehard brand loyalists that will buy every single Apple product, and for good reason. They are very, very high quality products. And I see Apple as a very, very strong player in the market right now. And that is why I'm going long on Apple as a very substantial part of my portfolio right now. Next, we've got Tesla, which is about 10% of my portfolio. And Tesla is the really pioneer of electric vehicles right now. The Model 3 is just ridiculous, and they're really coming out with a lot of strong moves right now. And so for their 1 year return, they have returned 46% this year, which is again just astronomical. These numbers are not to be expected, and this bull market that we're in is really kicking it. So do not expect returns like these every year, because they are not average market. This is not normal. This is a bull market, and there are bull markets, there are bear markets, and you have to know which one you're in, and you have to be ready for the next bear market whenever it hits, because it will hit probably pretty soon. Now, Tesla does not have a PE ratio. Well, they do, but it's negative because they're not turning a profit yet, because they are such a big innovator. They are pursuing all of these huge projects that are not giving them returns right now, but in the future, I see 5-10 years down the road, they're going to be making huge returns on all of this work that they're doing right now. And so right now they don't have a PE. Their forward PE is also negative, so they're not expected to be turning a profit this year. But 5-10 years down the road, I think they're going to be a very profitable company, which is why I am going long on Tesla as well. And for their future, the Model 3 release is huge. It has been huge. So that is one of the main reasons that I'm invested with them right now. And also they're pursuing a very widespread power grid, which I also see as a very smart play for the electric vehicle business. So I'm in with them for that as well. All right, next one we've got up here is Facebook, and they are about 5% of my portfolio right now. And Facebook, everybody knows Facebook. They run Facebook, Instagram, WhatsApp, and also the VR company Oculus is owned by Facebook. So they've got a lot of different projects going on right now. Facebook and Instagram are very profitable with their ads right now. WhatsApp, I'm pretty sure has still yet to be monetized. I don't personally use WhatsApp, but to my knowledge, they have not monetized WhatsApp yet. I don't think there are ads on there yet. Could be wrong though, so definitely let me know in the comments below if I am wrong about that. And then Oculus as well has potential to be a huge player. They're already a huge player in the VR business, but as VR gets bigger, Oculus, I think, is positioned to be a very strong player in that growing market. So the 1 year return on Facebook has been also quite high, 52% over the last year on this investment. So I'm very happy with that as well. They've got a PE ratio of 36 right now and a forward PE of 28. So again, I like to see that trending downward. And the future of Facebook I really see in first live videos. Live videos get so much view time, views, and just people engage so much with live videos. They get I think it was 3 to 5 times as many views and as much watch time as videos that are just published. So live videos are really where it's at, and they really provide a way for people to participate in a shared experience, which is really big on the internet right now. People definitely want to be having these shared experiences with other people. So live video is definitely a good space for that. Additionally, Facebook is moving very quickly in the direction of virtual reality and augmented reality. And they're actually trying to get augmented reality social media going, which I think would be very interesting. I think it's a very interesting space to be pioneering in. So I'm definitely interested to see where that goes in the future. And lastly, they've just got a bunch of long shots that they like to throw out and just see what happens, because they have all of this income coming in. They can afford to do a bunch of long shots and have a lot of them not work out, but learn from their failures and use those failures to construct more long shots and eventually get long shots that just go huge. So I really like them for doing that. I like to see companies taking chances and not just performing to hit their quarterly earnings benchmarks, and really just shooting for the stars and trying lots of new stuff, because that is how innovation happens and that is how advancement happens in the economy. Last on our list, it is the outlier. It is the non-tech company, and that is Wynn Resorts. So I decided to get in on Wynn Resorts a while back because I was looking for a solid dividend paying stock, and it has been a very, very nice investment for me. I'm very happy that I decided to invest in Wynn. Again, they are about 5% of my portfolio. And Wynn Resorts is a company that operates very high-end resorts in their main two markets are Las Vegas and Macau. And over the last year, they've had a 75% return, which is just, it's ridiculous. This is a great bull market we're in right now. I'm gonna be sad to see it go, but I'm gonna enjoy it while it lasts. They've got a PE ratio of 44 with a forward PE ratio of 25. So that is a huge reduction there. Profits are going to go way up, and I see that the main reason for that is because Macau is a great market. It's really taking off, and because Wynn is positioned so highly in the resorts, they are really the top of the top resorts, so they can attract these huge customers who just come and spend so much money at the casino and generate so much money for Wynn that as they expand and they take these huge spending customers with them, they are just going to become more and more profitable. So that's where my investments are at right now, and generally when I look at those, I see a couple things. So first, I see that they are all pretty large cap companies. All of them have market capitalizations of above $10 billion. Some of which are in the hundreds of billions. So I see myself as a very invested very heavily in large cap companies, which I think I might try to get into the small to mid cap companies this year. That's kind of one of my investing goals, is to do more research on small to mid cap companies and get into that space, because I think there is a lot of space, there's a lot of growth going on there that I want to see about getting in on. Additionally, my portfolio is very FANG heavy. As you saw, I think it was about 55% of my portfolio is FANG stocks. So I'm a very tech heavy investor right now. So again, I have mixed feelings about diversification, because I feel that if you are confident in a certain industry and you really think that there's potential there, I don't think there is much sense in spreading your bets too thin, because then you're not going to be getting great returns. Whereas if you're confident in a certain industry or a certain sector producing great returns, then I think that you should not be worried about putting your money there, especially if you're a young investor, because you have time on your side, and even if things don't go your way right now, you're going to learn from that, and you're going to be able to take that knowledge with you forward and apply it in further investments. Lastly, like I said, I'm very tech focused right now, and I'm also very domestic in my investments. So I want to branch out into the global market this year. That is another one of my investing goals for the year, is to branch out globally. So I still need to do my homework there and find out some good global investments, but I think that I should really diversify out of just the domestic market, because there is plenty of growth to be had elsewhere, and it's not just in the US, even though I'm heavily biased towards the US because I live here, but I need to branch out, do some homework, and find out more about the global market as a whole. And lastly, I should just mention again that we are in a huge bull market right now. When you look at these numbers, do not think this is standard in the stock market, because it's not. These returns are not to be expected every year, because we are in a huge bull market. So that is why the results are so high. Anyways, that's about it for the video. Let me know in the comments below if you enjoyed this type of video, if you want to hear more about my personal investing, the thoughts behind my investing, any strategies and stuff like that. So let me know in the comments below as our question of the day if that is something you're interested in. Also, if you're not interested in that, let me know that I shouldn't make videos about that, and I won't. And if you guys enjoyed this video, please leave a like and subscribe and click that notification bell to be notified anytime I put out a future video. Thank you very much for sticking around, and I'll mention again that I have an ebook that I just released. It'll be linked in the description below. It's completely free, and it is targeted at millennials to get you guys moving towards financial freedom faster and get on that fast track towards financial freedom. And even if you're not a millennial, it's gonna have huge benefits for you, big tips on budgeting, investing, compound interest, all of that fun stuff. It's all in there. It's a short read. Check it out, and until next time.